So I've been doing some research on ISAs, and it turns out that most people in the UK don't even make full use of them. Now, if we look at this graph here, we can see that since 2008, the number of people that have been subscribed to any type of ISAs is actually reducing. But if we look even closer, we can see that cash ISAs make up for the vast majority of ISA subscriptions, and stocks and shares ISAs only make up about 30% of the total ISA subscriptions. Now, currently we are in a phase where cash ISAs are giving out one of the highest amounts they have given in a very long period of time, with an upper average being around 5%, meaning that if you put your money within a cash ISA, it will grow at a rate currently above inflation, which sounds all well and good. However, I personally think that if you take advantage of a stocks and shares ISA properly, you can get something around 7 to 9% per year in the long term pretty easily. So in this video, I'm going to show you how I would invest £20,000 per year by utilizing the ISAs that we do get for being in the UK. There are 4 types of ISAs that we should know about. One is the Innovative Finance ISA, which I think pretty much no one uses. The other is the Lifetime ISA, where you top up £4,000 and the government will give you a £1,000 bonus. However, this comes with a lot of stipulations, so I wouldn't be looking in that personally. So ultimately, we are left with 2 types of ISAs. One is the cash ISA, and the second is the most powerful in my opinion, the stocks and shares ISA. Now, a cash ISA is a good place to put your money if you are very risk averse, because with a cash ISA, your money is completely protected by the FSCS, which essentially is kind of the government, and each account is protected up to £85,000. So currently, Trading212 is the champion for cash ISAs. You can see if I go over here, here is their cash ISA, and currently you can see that you can earn 5.2% as an annual equivalent interest on any of your cash savings. And of course, with a cash ISA or a stocks and shares ISA, you can only deposit £20,000 per year into them and no more. So any cash that you've put in within your cash ISA, you will be getting currently 5.2%, but as the Bank of England reduces these rates, this is going to go down accordingly. If you want to sign up to Trading212, whether it's the cash ISA or the stocks and shares ISA, or even a general account, use a link in the description down below, and when you do that, you will receive a free share. I also have a promo code if you've signed up recently and haven't received a free share. Use the code JUBAIR and you should receive a free share. Now, before anyone accuses me of being biased or sponsored, the second best option I think is from Chip if you want a good cash ISA. Now, I've used Chip a lot in the past year and I find them really good for instant withdrawals. I don't get anything out of actually promoting them, but currently they are offering the second best in my opinion at 5.1% annual equivalent rate in their cash ISA. However, the problem is because there is very little risk to you, the rewards that you get is also pretty low. Now, this video will therefore focus on stocks and shares ISA, and like all my other videos, I actually want to show you what I'm doing with my actual money. Now, here is my actual stocks and shares ISA that I have for this tax year. As you can see, I have completely used up my current year's tax ISA allowance. That being said, Trading212 offers a flexible ISA, so I can actually withdraw up to £20,000 from here, and as long as I put it back before April the 6th, none of my ISA deposit allowance will be affected. Now, this means that if you do want to maximize the amount that you earn from your investments, you're going to be wanting to use a stocks and shares ISA, as anything that you gain within this stocks and shares ISA, any sort of capital gains, any interest on your cash, or even dividends paid out, they are not taxable. You can see that my current ISA value is £43,665 with a near unrealized loss of £600. You can also see that I've invested £44,000. This was only possible because, of course, I've had this ISA for about 13 months now, and all the gains that I made from trading or whatever I did in the past, that has contributed to a profit of £4,262. So that is over 10% within 13 months. Let's say that is 8% per year when we do the division. Now, I know over the last year that number would have been a lot higher if I had stayed invested. It would have been closer to 20%. Therefore, this video becomes even more important because the strategy that you should hold in order to maximize your gains is to invest in a good broad market index. Now, currently I have invested in the Vanguard FTSE All World. Now, this is a distributing fund which pays out dividends that I would use to manually reinvest back into this fund. Now, I've only held this for 1 week, and as you can see within that 1 week it is down by around £600. Short-term fluctuations are bound to happen. Now you can see if I held this over the past year, I would have made a positive gain of 15.81%, making this a very good investment over the past year. In fact, we can see since January 2020, this fund has netted us 44.19% in the positive. Now you can see this was even after the COVID crash here, so if we had kept investing regularly, dollar or pound cost averaging, we would have reduced our average buy-in price. Now you can see my current average buy-in price is £102.44. This is only the case because this was a very short-term buy, which I do not recommend. Now, of course, none of these videos are financial advice and I can't actually advise you into what you should invest into. But generally speaking, a broad market index or a global fund like this, the VWRL, gives you exposure to a lot of the markets all over the world, including something like the S&P 500. In fact, it is very S&P 500 heavy. I've made a video over here which will help you pick your global fund, one ETF that you can use to get exposure to the entire world. So the way that I would use my ISA going forward is to just put all of my money into one broad market index, such as the VWRL. Now, of course, because this is an ISA, I'm going to have to wait until the tax year opens before I actually can deposit into this account and make more use of buying more units. You can see currently I have 432 units or shares in the VWRL. Now, the good thing about this fund is that it is distributing, meaning that when the dividends are paid out to me, I can actually start buying more shares. And in the long term, I will rack up more and more shares, and as they appreciate, the value of my portfolio will grow as a function of time, helping me build my wealth and completely tax-free at that, because it is within a stocks and shares ISA. I personally would rather just go with an ETF as it gives diversification over many different sectors, industries or countries, which basically means if one company doesn't do so well, there are so many other companies that can actually pull up the socks of the one that's not doing so well. Now, there have been some ETFs over the past year that have outperformed many of the other indexes. However, I would personally say to do your research and go for something that performs better long term, maybe 10, 20, 30 years, rather than looking at what has been doing well over the past year. Now you can see this fund IYW, which is the iShares US Technology ETF, which is also a distributing fund. Now this isn't available to buy on Trading212, but I thought I just want to look into it. You can see that over the past year, this fund has yielded investors 37.32%, which is really high. Now it goes without saying that past performance is no indication for future performance. And also these ETFs can often be extremely new with very little proven history, very small assets under management, which could also mean that these ETFs could be scrapped at any point in time. Also, these ETFs could be vulnerable to very high volatility, meaning of course you've gone up 37%, but the next year, maybe there will be a dip of 50%. Who knows? So here is another fund, just for example, this is the XLKQ. This is the Invesco Technology S&P 500, basically IT sector, accumulating fund over the past year, gained investors over 40%. Now, like I've said, these funds don't have that much history and they are not that well diversified because of course we're just looking at a particular sector of a particular economy. Now, it is very likely that this is going to be very volatile in the future. We saw with the start of the recession that information technology companies were the first one to, dip by 30-40%. So I personally would not recommend just looking at annualized returns, but if you're going to do that, look at the returns of the past 10, 20 and 30 years. So what I would do to maximize my ISA and to make the most out of getting the most wealth I could get is to use a stocks and shares ISA. Now, I'm not going to tempt you into using any particular stocks and shares ISA. The one that I particularly use is Trading212, but you can choose whatever ISA you want. This is not the point of the video. Once you have opened your stocks and shares ISA, I would look into looking at investing into broad market ETFs, such as a good world fund. Me, for example, I went with a VWRL, but there are so many good options with lower fees, different distributions all over the world and things like that. And all you have to do is throughout the year, try to max out your £20,000 deposit limit or allowance, whatever you want to call it. Lump in if you want, or dollar cost average as you go. And in the long run, 10, 20, 30, 40 years, you should see your wealth growing as a function of time. Now make sure to check out some of my other videos and I will see you in the next video.